Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Friday, August 8th, 2024. It's 4:02 p.m. Eastern Time. The markets are now closed. Just want to do a quick recap. We'll stick to mainly the stock markets. We'll look at a couple of the big tech stocks. So we closed right on that target slash support level of 53.76 right there. You can see this is, after hours are still ticking around, but these are the futures 53.74 as I typed. That's pretty much a park right on support, and that's it. So you got RSI divergence, almost divergence on the RSI. You made actually, it's not even, it's ever so slightly. Here's a flat line. So equal lows there. So yeah, you've got divergence here, and you also have it on the 60-minute charts. So I actually went home long, not very long. The risks right now are certainly bilateral. It can go either way, but I like what enough of these key stocks in the market's parked at support, resistance. Support. We hit the bounce target on the VIX. A lot of stuff here, so a lot of reasons to go home. And like I said, it didn't translate today, and I haven't turned the TV on once, but I'm sure they're going to come marching out and singing the praises of a locked-in rate cut, and maybe even the 50 basis points if we'll see. So, and then maybe see some buying, reflexive buying again. Longer term, nothing's changed. I think we go lower, but there could be a decent bounce too. I mean, look, we parked on support. We got to hold it on Monday. I can see a little bit of a punch through. Maybe if the futures want to move down on Sunday night, Monday morning, you've got even better support. Let me start with the SPY, and then I'll get to the NASDAQ. So that next target that I gave you all the way back here when looking for a bounce, and then move down to these two, is 52.64 from today's low. That's only another 1.25%. And why is it even better? If you remember on SPY on the 26th, I think, of June, gave you these targets here, and we're just a little hair shy of that T1 level 525.23. Comes in with the this fib level. I need to actually tweak those. Just these. Let's put that back down there. So either way, that's my price target, and that's what I'm going to maintain still, that T1. So again, that would come in right roughly with that one I just gave you on the futures. But again, close enough. Remember that it's all about the Qs. So let's talk QQQ first. All right, QQQ. As I started the day, we ended the day. We're right on that 449.70. Remember, initially I had initial target, either primary trend line and or the intersecting 449.70 support plus the 23.6% fib. Two of those three were hit today. The trend line was hit here. We had that little tradable bounce. We gamed off it. But remember, this is also what you'd call a BOD, or benefit of the doubt support. When I have two support levels in close proximity, you want to give the second of the two, let that be the benefit of the doubt, because traders may step in there. They stepped in today. They stopped the slide. There were enough buyers to offset the selling, but we sat there all day. Got that little doji candle, pretty much closed about where we opened today. So that's what today was, basically a park and hit of a another target trend line. Still same first target area, and then I give you, like I said, I'll move this up to T2 later. So if we do punch down, remember we have the key 200-day moving averages next week. But let me show you some of the stocks that matter the most. Apple, of course, really kind of blah, a meh chart. They kept it green all day. I'll give them that. They liked whatever. Investors liked whatever they were selling after earnings last night. And even though I think I saw glance the headlines, iPhone sales down, and we all know that's just about everything for Apple. Services is big, but the services is a play off the iPhones. More iPhones out there, the more people sign up for iCloud and all iMusic and all that other stuff, and vice versa when sales drop. So it goes lower over time. I have haven't changed my outlook on that. It's just near term. I don't have a strong opinion, so we'll move on. Microsoft kissed, pretty much kissed the intersecting 200-day moving averages. That's the blue and red line, 200 simple and exponential. They're coming together right now, pinching. So as I've been, again, as I said in the video earlier today, I've been calling the big tech and the market down to these 200s. now here's one that's hit, not the only one. So there's one. And remember, they're going to step in and buy collectively. And I've never seen it happen. They're all not going to hit on the same day. I'm talking about all Mag 7. That doesn't happen. Some are going to lead to the downside. Some are going to lag. Like I said, Apple's way up there. And ultimately, it'll come back like it always does and check its 200s. And then ultimately, sooner or later, it'll break the 200s and we'll be in a more of a confirmed longer-term, intermediate-term downtrend. Right now, that's not the case. This is just merely a technical correction on the NASDAQ 100. By the old antiquated definition, 10% drop. All right, I just wanted to point out. So as I'm going through these market leaders, we have now. Remember, QQQ at support, SPY at support, Apple at support. I'm sorry, Microsoft at support, 200-day moving average support. That is. All on the heels of some pretty powerful breakdowns. Don't get me wrong. So I'm not talking, hey, new highs. I'm talking, can we bounce here for a few days, even a few weeks? Could be even a bigger bounce than one we just got if they really come in and buy here. NVIDIA, nothing on the daily, but when I zoom down to the 60-minute chart, which I needed to, let me do that back. Let me go back, guys. Sorry. Apple held that trend line on the 60-minute I covered yesterday. I want to cover those daily and 60-minute time frames on each. So far holding above the 60-minute downtrend line after this divergent high. Sell signal 1 there. Sell signal 2. Wedge break. Dancing still above support on the trend line. Microsoft, positive divergence right now on the 60-minute chart. I like to see these 60-minute divergences. They are my go-to swing trading time frame. Divergent low, you go long, trade the rally. Divergent high, correction. That just bounced off support. Divergent high, drop. Divergent low could be the catalyst for a rally. I like, I like me some 60-minute divergences as a swing trader. It's really just like I said, a go-to good swing trading time frame. NVIDIA also divergent low on the 60-minute chart at support, holding the top of that gap. Remember right there. Level I think will go sooner or later, but and when it does, there's that next target. These are just my kind of shorter term swing targets, but you have to respect this divergent low and the fact that NVIDIA is down 28% off its highs. And you've had dip buyer step in, and we've been able to juice these rallies. But either way, I just wanted to say this may or may not be the catalyst for the next ride up. Sometimes when the top is in and you've started a new bear trend, divergences, especially those on the intraday time frame, don't play out. But again, 5-15 minutes, they've been burned through last 2 days. Some of those short-term divergences, but the 60s are usually where, in a downtrend when I'm short or in an uptrend when I'm long and bullish, those are the areas I tend to reverse those positions. Either start taking profits on shorts and or going long when we have positive divergences on the majority of market leaders and the majority of the indexes. Let me actually get to that real quick. Which here's QQQ. I almost left that out. Of course, you want to see it on the index. There's a 60-minute chart, positive divergence. Here, I'll draw it for you clean without all the busy lines there. You've got this low to this low. Price is making lower lows. Here's the indicator. Need to curl up. So basically what we need to do, ideally, don't always get what you want, is gap up on Monday. Futures, they can go up, hold up over the weekend and or rally Sunday evening into Monday morning. And then or we could open where we're at. We just can't go too much lower. Why? Because if we do, we're not going to have 60-minute divergence, and that's going to increase the odds we shoot down to my next targets on the daily chart. But as of now, that's where we ended the day. Positive divergence, a baked in the cake rate cut, maybe even 50 beeps next month. And so there's Apple, Microsoft, I covered divergent low, NVIDIA, divergent low, Alphabet. For all intents and purposes, almost an equal low. We'll call that an equal low if you have to squint and just say, all right, that's an equal low. Higher highs on the indicators at support. So positive divergence on the 60. Amazon, no divergence, but I covered Amazon. I'm going to toggle back, which I'm doing. I'm kind of all over the place here, but daily chart. See, NVIDIA still got more downside coming to the 200 days. A trend. I mean, a whole lot more downside if you look at my long-term targets, but let's just worry about, today, tomorrow, next week right now. Alphabet, positive divergence on the 60, and then the daily chart was support above that gap. Amazon, as I talked about, overshot the 200s, and I told you this, hit that 160.12 target, and as I said, it would probably park back on around the 200s, and that's what it did today. It's kissed the 200-day simple right from below that blue line there, and we parked in very close proximity, and so that's where we're at. So now what I'm doing is checking off, and we're getting, several of the market leaders are now hitting the 200 days, as I covered earlier. The semiconductor SOXX hit the 200s. We'll get to that in 1 second. Broadcom hit a key trend line. So that's it, guys. It's not a screaming all-in long case. For me, it's enough to, you've got 3 options on a Friday as a trader, even a futures trader, because the futures, unfortunately, they do shut down Friday evening and then don't pick back up till Sunday. Whereas every other, other than that, they're trading 23 hours a day around the clock. So you make a decision, either go flat, long, or short. If I'm just talking right now about the indexes. If I do another video today or this weekend, I'll cover all the other stuff, but this is where my focus is. Tesla, ugly. Ugly chart, but look where it's at. Back to the 200s. And Tesla's a sloppy little sucker, kind of all over the place. One thing you can see, look at the differential between the red line here, the 200 exponential, and the simple, because it's such a volatile stock. It moves a lot higher up and down in percentage terms. Usually don't see this big spread here between the 200 simple and exponential on most of the market leading big tech stocks. Tesla's more of a, it's in its infancy stages. It's a relatively new company compared to the rest of the big tech stocks. But there it is. I just want to point out, however, you have both of them there, the 200 simple and exponential. When you gave them up there, you had a big correction. You took them back there, and we rallied back. So they were dancing here. They were buying and selling off the 200 simple or exponential. Again, I don't have a strong convictions, but what I can tell, and that's kind of on that daily chart, but what I'm doing, and that's why I'm doing this video, I just jumped down to the 60-minute chart, and there it is, folks. Just like you had a divergent high here, and you have a divergent low there. So that's the majority of the big tech Mag 7 stocks, positive divergence on both QQQ, as I just showed you a minute ago. And SPY, you have, like I said, you definitely have the RSI divergence down here, this lower indicator, higher highs, almost equal highs right here on the PPO. And you do have it, as I showed you, I believe, on the futures. Yes, I did. So that's it. And, QQQ, I put the higher weighting of the two because it's all about those big tech stocks. So that's it. Let's see, VXY, like I said, the VIX popped up, hit our 4th price target, pretty much parked on it. We had a little pullback initially and parked on it. I give you a 4th target of 1555. Is this post? Yeah, this is post market. Let me turn off post market trades. There it is, 1549. So either way, we closed right on it. So, if we pop up and we go up much more next week, it's probably going to be just a big, not necessarily a crash, like I said. Yes, let's say there's lots of support levels below, but last couple of days we just punched through the shorter term ones. Okay, but that's it. I don't want to beat a dead horse. We close on a key fib, price target support, SPY, QQQ. With the 200s is the next, and price support just below, not too far below. As I already mentioned, the semis parked right on the 200-day simple moving average, SOXX. Then you have XSD, that's another semi. That one took it out, but these guys have their different companies, semiconductor ETFs, and they have different weightings. SOXX tracks the Phillips Stock Semiconductor Index. That was the first to market. They've been around forever. Here, that's SOXX. I think you type it in this way. Yeah, this is the actual Philex. If you want to go back and chart semis, this is the longest standing semiconductor index there is. You can go back to the 90s right here. And this is what I talk about all the time. People they either don't study, haven't been doing this long enough, or they don't take the time to study the charts. If you're going to be a historian, that's one thing. If you're going to be a market, if you're going to try to actively engage the markets, you need to understand what you're trading. I call it the know your security rule. Just like when I was a broker, they had the know your client rule. You had to know everything about them, their net worth, their income, financial objectives, all that blah, blah, blah stuff. It's by industry regulation. And as a trader, I call it know your security rule. If you don't know the history and the nature of your security, in other words, if you're trading a certain stock, be it Tesla, anything else, what's the history of gapping around earnings? Does it have some companies manage earnings like it's a like a well-oiled machine? There's never any surprises. Some companies do a crap job of it. Intel is a great example. Intel today got clocked down, closed down 30% on just a complete miss on earnings. And you can see this one right here, if you recall, was one of my top picks for you back here when the rest of the semis were too hot and I was getting bearish, starting to short them. I said Intel long here. We had positive divergence and we were at support. We were at support also on the daily. It was this weekly chart here. Oh, the back test of the trend line. That's what I highlighted. If you go back here a few months ago, and I gave you a couple targets with a max potential bet down target of this trend line in that 37.20 level. Boom. Perfect tag of that, and that was it. That was the end of the run. And so here's my point is, if you go back in time, and that's kind of an outlier right there, I'll tell you, for Intel. This was the former king of semis, long since gave up the title, obviously. But again, if you look at a company like I mentioned Tesla a minute ago, and you go through it and you study it and you trade it for a while, and if you haven't traded for a while, you have to familiarize yourself with it. And you have to go back and look at their earnings dates, put them up on a chart or whatever, or look them up, and then say, what are the history of, what does it do around earnings? Some companies, like I said, have very little surprises and very little movement. Others are prone to 8, 10, 15% gaps in either direction. And so if you aren't aware of that and you go in with a heavy position, then you're either going to be very happy or very unhappy the next day. So that's about it, guys. Oh, and the other things that I factor in, like I said, VXY was a proxy for trading the VIX. Trade idea parked on that level. The VIX volatility index itself hit, and these are levels again laid out for months now. 2884 is the target I had in this downtrend line, which we hit. We inter-session pierced it. See the fat part? That's where we closed. And on the weekly, it's even more clear. We had a level here. Actually, no, it was a daily. It had that line right there. So we closed right on that resistance level. We did take out this downtrend line. So I think there is more upside to come. But if we get a rally next week, we'll probably come back in and back test this. If it's a bigger rally, we'll go down even more, and I will certainly give you updates on the VIX. But as I told you, I had VIX longs. I reversed them. Nothing crazy because the VIX, the futures were up at one point, up over. Actually, they closed up about 25% today, not far off their highs. So I'm about right where I got into those, and I'll take a small amount home, but nothing crazy. Like I said, the risk of a crash is certainly elevated. If I thought it was super high, I wouldn't go home long, and I'm certainly not going home heavy long. But like I said, there's nothing I can do between now, unless I close them out tonight for the future stop trading, but I'm not going to until they start back up Sunday evening. So if we see any wild, funky things going on Sunday, but I don't typically react to Sunday opening futures trades and all that. I'll watch it, and if there's any opportunities, take advantage. But usually, it's going to be we'll have a good idea come Monday morning. If the market's going to hold and rally off these support levels or break. That's the other thing. I'm not sitting here talking about all the usual potentially bearish things I usually do talk about. Believe me, they're all in my head. Hedge funds breaking and blowing up. Pension funds, I'm looking at California. I got a headline today. Who was it? One of the big oil companies. Don't quote me to it. Was it Chevron? Another big company. Tesla just left California, moved to Texas, and so is now one of the big oil companies today. I saw that, and I even pulled it up, and you can see tons of companies pulling out. Like I said, Perplexity is a great search engine. I have no pony in that race, horse in that race, but pull them up, use them. They have an app on the phone, and and you can get, when you type in, they give you the follow-up questions too. If you say how many companies have left California in 2024, and then what's the impact, they talk about the revenues they're losing, what the corporate tax rate is, the fact that 1% of all the top 1% of tax payers in California pay 50% of the state income tax, and those billionaires are all leaving too, a lot of them. And so where I'm going, this is my tangential brain, this all plays into the longer term where we're going. You're going to see CalPERS at some point. It's going to be, and not just CalPERS, they're just the biggest. There's a lot of, and for years, there have been a lot of underfunded pension plans, and they're all, when the stock market reaches a certain level, they're gonna eventually blow up, and it's gonna be a problem. And shortfalls for CalPERS fall on the taxpayers of California. So at the same time, where you have these underfunded pension plans, you've got a lot of businesses, big businesses, and wealthy residents moving out of California. And so, long-term outlook there doesn't look so good. And those are all things that will be a systemic risk to the financial markets. And the government will do what they do and bail everybody out, but at what cost? So anyways, we'll see. That's longer-term stuff, but I just want to say it's very much in there, and then that can happen if you do see, suddenly, you usually don't see a big hedge fund blow up or, brokerage fail when the VIX is low and everything's hunky-dory and there's stability in the markets. It's when you start seeing NVIDIA, the most beloved and overowned and overloved stock, down 20-something% in a matter of just mere weeks or months, and then all of a sudden Apple, Alphabet, Microsoft, where these pension funds and hedge funds and everybody, your 401k, everybody when, again, right now it's just a correction. It's just a 10% drop in the NASDAQ. No big deal, right? Even less than the S&P. But if and as we go lower, then it becomes a big deal. It's the wealth effect. People start tucking in, tightening up the belt, and then it's a vicious cycle. And that's where most economists can't wrap their head around, how are we going to get a hard landing? And it is that vicious cycle that one thing then leads to another. Layoffs beget, more layoffs and more selling in the stock market because fewer consumers have a paycheck, so they're tucking in. And it's just a cycle of the market. So, again, maybe it happens now, maybe it's 3 years from now. We haven't had a real recession. Like I said, COVID was Ursa Interruptus. It was technically a recession, but the government ended it before it even could get started, basically. And so that's it. All right, guys, the levels, what to look for, and I'll pick it up on Monday. And, again, if the futures are up or down big, I'll get something out to you in the morning. Otherwise, maybe we'll just wait, see how the market opens. And as far as bounce targets, if they hold these levels and you have those 60-minute divergences, I'm not even giving you bounce targets now. It's just, we're not looking at another 3-5% bounce, probably looking at a little bit more than that. Quite a bit, maybe, double digits, 8-10% bounce in the big tech stocks in the markets if these support levels that we closed at today hold, or one little, like I said, I could see a little spike down more in SPY at the open on Monday because we're just a little shy, even though QQQ parked on support. SPY has comparable support here, just a hair lower. So that's it. Anything much more than that's going to likely open the door to the next targets and see another, some more powerful selling next week. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.